You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. It is Monday. It is noon Central. It is 1 p.m. Eastern. It is time to kick off our broadcast week here on the old Options Insider Radio Network. Yep, it's time for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the aforementioned network, as well as, of course, from the optionsinsider.com. If you like what you hear, make sure you're leaving those reviews on your platform of choice to keep those new listeners coming. And also make sure it's that time of year. It's earnings season. We know you guys like those earnings move and earnings move results reports and the earnings season reports. They're coming in hot and heavy from our friends over there in Orat's Land. You can find them for yourselves at theoptionsinsider.com. You can't beat the price. They're freaking free. So if you like to do any sort of volatility analysis around earnings season, you're doing yourself a disservice if you don't check this stuff out. Theoptionsinsider.com. Click on the Options News and Articles tab, and your journey begins. And, of course, keep those questions and comments coming. We do love to hear from you guys. And let's see who else we're joining, or I should say who else we're hearing from here on the show today. Let's start off in that sleepy hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to this program on this fine Monday, sir.
Nobody out uncles the Mike. That's the way it goes.
I like that. Yet another new tagline for your business card. You don't need like 3 business cards soon, sir.
They're not all going to fit on one after all the history of this show, all the marketing taglines we've had on here.
Exactly. Uncle Mike is just overwhelmed, awash in marketing taglines over there. Nobody out uncles the Mike. I like that. That's a good one. And also joining us, he's got the spurs, he's got the boots and the chaps. He's getting his right along little doggy. He's perfecting his drawl. The newly minted Texan himself, Mr. Mark Sebastian, a.k.a. the Greasy Meatball from OptionPit.com by way of Carmen Line Capital. I don't know if that nickname's going to fly down south there, so you might have to come up with something new for you, like maybe the Greasy Jerky. What do you think?
I was thinking the Sloppy Chili Man.
All right, sloppy chili man. A lot of syllables to that. Kind of hard to roll that off the tongue.
You just call me Cookie. You know, I could be like the cook for a
wagon train.
For a wagon train. You can just call me Cookie.
Cookie. There we go.
Meatball right. Cookie.
The Greasy Meatball. He's got his sight sets down there on Austin. Going to be heading out pretty soon there, listeners. But we'll keep him on here for a little bit at least, until that Texas drawl starts getting overwhelming. Then we might have to slide old Cookie to the side as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. And it was kind of strange this week. I almost literally could have just used the same notes from last week because it's yet another strong start to a week on yet another bit of, vaccine optimism seems to be, or treatment optimism, I should say, out of Gilead. That seems to be the general consensus as to why the market's rallying, even though I've started to find myself feeling like a little bit of the old school old-timers when I first walked on the floor of the SEBO, and I was all optimistic and full of analysis and reasons why things were going up and things were going down. And the old-timers just look at me and shake their heads, and they say, kid, there's more buyers than sellers, or there's more sellers than buyers. And I thought that was extremely cynical and just completely idiotic and made no sense. And now, a few years later, I'm starting to come along to that way of thinking because the market, just the whims of it are somewhat capricious out here these days. Coming into showtime, we're seeing the Dow up strong, up 1.8%. We're seeing the S&P, the laggard today, up 1.3% or so. And we're seeing the NASDAQ up about 1.4% out there. Our old friend, the Russell 2000, actually the laggard today as well. The RUT only up 1.1%. So a rare moment when the Russell 2000 isn't leading the charge to the upside or the downside. Crude oil, WTI back above the 40 handle, 40 and a half or so, kind of holding still there. Gold also ticking up, perhaps another sign that there are some lingering concerns. Everyone's all excited about Pfizer having maybe some progress on the vaccine front. Also, Gilead with their remdesivir, so that 5 times fast, maybe having some efficacy better than perhaps they thought, even though they're a little bit resilient. It is funny how the vaccine news, they digest the chunks they want, because last week we saw horrible news on the virus, and yet the markets rallied, and now we're seeing good news on the virus, and then the market rallies. So it's kind of just very selective what is being allowed to make its way here into the narrative. But at the end of the day, right now, there are currently more buyers than sellers. So I have returned to my old school cynical ways. Mr. Uncle Mike, save me here, sir. Return me from my deep-seated cynicism. Start us off with some optimism. What is lighting up your tape on this Uncleist of Mike Day, sir?
There's more buyers than sellers. That's all I got to say. No. The thing that's really lighting it up to me on my tape is Apple. Apple almost crossed the 400 mark earlier today, showing the high at $399.82. Couldn't quite do it. So that's one of the big things that's lighting up my tape. The other one, of course, we have silver. Silver SLV is around the 18 mark at this point, and so a lot going on in the silver area. I think silver might finally be looking at gold and saying, I guess I'm allowed to go up too. Gold went up all this time, but we forgot to, but now we'll remember. That's kind of what that's feeling like. But the main thing of all that's really lighting up my tape at this point would be the S&P 500 in general. We're right at the open of the year right now for the S&P. And so if we want to go positive on the year, we have to cross this mark first. So we're slightly ahead of it right now with SPY based on the close of last year. And so I think we're at a very key point at this point in time. Throughout the day, I've been preparing as to what I plan to do with client money at the end of the day, because we will be, if we are positive on the year, then game on. I got a lot to talk about come Thursday. I did put on some smaller positions, just still with my 5% rule, no more than the 5% allocation for my aggressive trading strategy. But it's more, I'm kind of looking at this to where if we're positive on the year, at the end of the day today, I'll probably be adding some more deltas. But we'll see. Might wait till tomorrow, but a lot of market to be had between now and 3 o'clock Central Time. So that's another thing with which I'm looking at. Financials are up on the day today as well. But for the most part, the main thing that's lighting up my tape would be the fruit company. And just looking to see if we can cross the 400 mark. I think that would be a huge number for it, and see where we're at from there. We do have a lot of optimism that's going on right now, but just want to remind everybody that we have been in this channel between 300 and 320 with SPY, and a little bit over the 320 level. So what's been pretty much resistance over the course of the last couple months has been where we are right now. Now, if we break through it, then I think the next level of resistance would be the all-time highs, which we had before all the COVID stuff came about. But if we don't, then be careful, pull in the horns, and maybe wait till we go above the resistance for the time being. So that is what is lighting up my tape. That is it.
I should point out for our listeners, you're watching it more from just a theoretical basis because your innovation index hasn't changed on Apple, right? Crossing 400 doesn't make you more inclined to dive back in, sir, does it?
No, it does not. It does not at all.
Well, there you go. So more of a theoretical interest level, Apple flirting with the 400 level. You know the show from a few years back, Uncle Mike was the biggest Apple bull there was out there. And he got a lot of flack for it, but it worked out, so he wasn't too sad about it. And now he's gotten the heck out of Dodge, and he's more looking from a theoretical perspective. Speaking of jumps out there and stocks that are moving, Tesla also moving as well. It's like a day that ends in Y. You got to have Tesla up there, right? But Tesla, big move today coming into the show, was up about, a modest 14%. It's up about 8.5% now, still 130 handles, $1,674. These prices have a hard time rolling off the sane tongue. 10th largest U.S. stock by market capitalization, at least it was as of this morning when it was up about 14%. People are speculating it's going to move on into the S&P, in which case stock getting a little bit of a lift out there. Yeah, its market value this morning was $321 billion, 10th largest U.S. company by market capitalization. So if you weren't already cynical enough about all this vaccine, will they, won't they, whistling past the graveyard, now here we go, Tesla. 10th most valuable company in the U.S. out here. Let's see. I got so excited and hot at the top of the show. Forgot to mention what we were seeing from a broad index perspective. Coming into showtime, we saw the VIX at about 28.25 or so. Puts it down a little over 2 handles, about 2.25 handles from last show on Thursday. VVIX at about 114. It's down about 4 points from last Thursday. And VXX at about 32.25 puts it down about 1.5 handles from our last show. All right, the table is set. The cookiest of cooks for the wagon train is up. Mr. Meatball, sir, what is on your radar today, sir?
I think you hit the nail on the head there, Mark. I mean, the movement that we're seeing out of Apple and Tesla and, those big five names is really astounding. And, it's such a concentrated move. And it seems so much to be kind of a chase trade. We're starting to see volatility rally a little bit. We've got the VVIX up as the market is rallying. And, a lot of the things that I look at in my option pit traffic light are starting to flicker saying, you know what, Mark, you better think about whether we're at kind of one of those points where we have a 100 or 200 point move, similar to what Mike mentioned coming up, because there is just a enormous amount of optimism built into this market now. And really that optimism is not built market wide; it's built 10 stocks wide. And if we start to see some softness in a big player comes in and decides to sell Apple in mass, along with some Tesla, one of the longs, it could put us in a kind of the indexes eat themselves type of mode, and we could have a really ugly day. This is very much setting up for kind of a technical sell-off caused by Apple, which is now by far the largest company in the world. It was, behind Microsoft, then it was neck and neck, then it was just above. Now it's made this giant jump. If that thing starts to eat it, we could see some real ugliness in a very short period of time.
It's funny. That's always been the concern about crypto, right? A couple of big whales dominate the flow out there, and if someone decides to unload a bunch of their Bitcoin holdings, watch out below. But you're saying even in the most valuable company on the planet, the most dominant share of the S&P, if you see some large players come in, you're concerned that's going to cause a ripple effect, sir?
Yeah, because a lot of the drive up has been algo-driven momentum investing. It just, trading algos, buying. And as soon as they start seeing selling, you're going to see this program trading come in and absolutely thwack Apple. And if you think the powers that be behind these algos aren't watching Apple, waiting to flip that sell algo, that thing is going to get an early switch to unload all that long. I mean, I think we're going to see a day in Apple where it drops 10% or more at some point.
Yeah, well, it's been rallying close to those percentages some days, so maybe a sell-off in that order of magnitude wouldn't be the crazy. At this point, nothing is crazy in this market, right? We've seen so many just unprecedented, absurd things that at this point, again, not to get back to the old school cynical hat I seem to be wearing these days, but nothing really would surprise me at this point. Let's see what's surprising the indices out there in terms of overall options flow, options volume, what's lighting up our collective tapes out here. Decent day coming into the latter portion of the trading block here. VIX pushing 200,000 contracts at about 190,000 contracts as of a few minutes ago. The ADV just a tick over 400K out there. SPY at about 2.75 million. The ADV 5.4 million, so closing in on a half their ADV there. The S 710,000, so a decent day so far for the S, even though the ADV has actually come in a little bit. It's a little bit north of 1.1 million out there. People have been waiting for a while, the return of the pits, to see if that would bring back some more flow, raise that ADV out there in the S. So far, at least, it hasn't really seemed to matter a whole heck of a lot out there from an overall flow perspective. The Qs, 885,000 contracts. The ADV just shy of a million, 979,000. So the Qs have been on fire of late. And IWM putting up about 334,000 contracts. That puts it up north of half of its ADV, even though pretty close to it. The ADV is 659 out there. Let's move on to the most active single names out there. You probably can guess the top two. I won't say them, but we did just discuss them, so they're going to be dominating our tape out here. Let's see what else you've got from a weird perspective out here. Number 10, our old friend Bank of America. Not our old friend across the street, though. Usually those two are neck and neck with Boeing, but no, not today. Bank of America out there solo on the top 10, holding down the 10 spot. Cost you 227,000 contracts to break into the top 10 today. That's pretty robust volume. We don't usually see it that high. Usually it's maybe $1.30, $1.40, $1.50. So to be over 200K for number 10 shows you it's a pretty active day in the single name spectrum, at least. Number 9, Pfizer, just talking about them earlier. They're feeling the love from a flow perspective, 233,000 contracts on the tape. Number 8, Walmart. Interesting stuff afoot out there, 235,000 contracts. We just talked on the show last week about how Walmart back in 2000 was one of those top 5 market cap names. These days, not so much. Tesla. Who cares about Walmart? You got Tesla, right? You sell a few electric cars, you're worth more than the largest retailer, at least physical retailer on the planet. Why wouldn't that make sense? Number 7, Facebook. 268,000 contracts. Number 6, JP Morgan. 273,000 contracts. Number 5, Microsoft. The only name in the top up there with the Fang M's now that was still there back in 2000. Good old softy at 305,000 contracts right now. Number 4, NIO, our old friend, getting a lot of love, reflected love from what's going on with Tesla. We've got NIO, of course, the Chinese electric car manufacturer. I don't see Nikola out here today. It's a rare day where the trifecta isn't in the top 10. NIO at 340,000 contracts. They've been hitting some paper of late. Numero trace here is AMD, kind of a perennial top tenner up there, 347,000 contracts. Then we jump up quite a bit, listeners, to numero dos here. Tesla, 581,000 contracts. That means Apple is north of that, listeners. Apple, number 1 with the bullet. This is the most active we've seen Apple in some time. 884,000 contracts on the tape as of a few minutes ago, listeners. That's just stunning. If you're wondering, the ADV out there is 853,000. So they've already surpassed their ADV on this move out here. So just astounding flow, no matter how you parse it. 73% of that coming on the call side of the ledger. They're up 12.7 or so right now, so 3.3%. Still not over that 400 level. 396.35 is where they're hanging out right now. They flirted with it, 399.82, as Uncle Mike alluded to, but didn't quite get there. But that's enough for a lot of flow. They're closing in on 1 million contracts already, which is just size paper, however you want to parse it. Listeners, let's see what else is lighting it up. Already we were excited for an active week because we have the old earnings season back in hot and heavy status out here. We've kind of been lingering in the dregs for a little bit. But if you like yourself a little bit of concrete earnings analysis, a little bit of volatility earnings going on, or volatility previews for the earnings season, we got you covered. This week, a hot week, a lot of financials popping off. Today, Monday, Pepsi. So if you like your flavored drinks and other things, Pepsi's got you covered. You got JP Morgan, Chase, Wells Fargo tomorrow, Wednesday, Goldman, PNC, and Alcoa. Thursday, Abbott Labs, Bank of America, Domino's Pizza. They've been lighting it up of late. Johnson & Johnson, Morgan Stanley, and the old Widowmaker. Used to be, maybe not so much Widowmaker anymore. Netflix, and then we got BlackRock and Ally and Citizens. So a lot of financials popping off this week. We already know financials is a pretty overwrought sector these days, so they're pricing in some juice. Let's see exactly how much juice they're pricing in. Let's look here. Let's go JP Morgan first. At the time of this report, remember this report courtesy of our friends over there in Orat's Land. You can check it out for yourselves at theoptionsinsider.com. 96 and a quarter is where the stock was at the time of this report. They are popping off tomorrow before the bell, JP Morgan. They were pricing in $5.83. Get this, listeners. In the past, they've moved $1.70. So they're pricing in some juice, I think, to put it mildly out there. Let's see what Abbott Labs is up to. Get out of the financials for a second. Abbott Labs was at $93.04. They were pricing in $4. In the past, they moved $2.41, so a lot more juice in Abbott Labs as well. Bank of America, they're always in our top 10, up there again today. They're popping off on the 16th before the bell. They were at 24, pretty much even at the time of this report. They're pricing in $1.54. In the past, they moved 54 cents. So pretty much 3x there, listeners. Looking at some juice here in financials. Let's go back to tech just for fun. Netflix, $548.73 as of the time of this report. They're popping off on the 16th after the bell. They were pricing in $48.64 for their straddle, and the price they moved $31.69. So more juice seems to be the order of the day this season, which maybe isn't that surprising, given that less juice was the order of the day last season, and that we know these things tend to go in cycles, and when they price in less, they usually tend to outperform and then price in more. Last season, they didn't outperform, they underperformed, and still they're pricing in more. So maybe finally all this uncertainty out there is starting to be baked into some of this stock price. Either way, listeners, looks like it's going to be a pretty fascinating season. We got all those tickers and a bunch more available for you guys. Kick the tires and light the fires over there for yourselves, completely free. TheOptionsInsider.com. Now it's time for us to keep on moseying, as the meatball likes to say, out into our next segment. It is time to get weird. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
Ready for the Odd Block, listeners, the portion of the show where we get weird, we get wild. Mr. Meatball, if I'm going to keep throwing all these Texas puns at you, we have to know if you're prepared for your trip, sir. Do you have a favorite cowboy movie or two up your sleeve? Are you an old school, Clint Eastwood spaghetti Western guy? What's your favorite go-to Western?
I'm a big fan of Butch Cassidy and the Sundance Kid.
Old school.
That's my
old school.
You can't do wrong with Paul Newman and Robert Redford. I think we all know that.
That's a good one. I'll accept that one.
And what's the one with Burt Reynolds that everybody likes? I like that one too. It's got the girl from The Graduate in it.
A Western with Burt Reynolds? You got me. I don't know. You can maybe go. You can go. Magnificent Seven's a good one. The old Yul Brynner. If you want to go old school, you can go. Of course, Unforgiven, modern ones.
Well, and I know you're a big fan of Quick and the Dead with Sharon Stone.
Of course, that's top of my list. If you weren't going to mention that one, it's going to have to kick you off the show right now.
Yes. You know what other one is amazing? Actually, is Tombstone. Right. Everyone
yes.
Tombstone.
I got two guns, one for each of you. We could quote Tombstone. Now you can take it down to Tombstone rabbit hole, which is very dangerous, sir.
Arguably Val Kilmer's best performance.
I would argue that as well. He plays a drunken, consumption-ridden Doc Holliday better than anyone. He's your Huckleberry. Oh, I could keep going forever on Tombstone. I haven't seen Tombstone in forever. It might be time to rewatch that one. That's a classic. If ever there was one, from all sorts of perspectives. Fun, overwrought, acting, cheeseball, but fun. All sorts of good stuff. Compare that to the Wyatt Earp that came out at the exact same time with Kevin Costner. Exact same story even. And you can tell which one resonated more with us. Before we keep going down and I'm your Huckleberry Rat, what's your favorite Tombstone quote? Hit us up, listeners. As we head on into the Odd Block, let's see what's getting weird outside of our Tombstone love. I can't believe I forgot Tombstone. It's a great one. Let's see what our Eye of Sauron has for us out here. Let's see. Let's kick it off. Let's go into semis with STM Microelectronics NV, ticker symbol STM. So at least their ticker is appropriate. This thing is trading at $29.33. This is obviously a semi. They're a French-Italian multinational semi, headquartered in Sweden. Or it should be Switzerland, of all places, interestingly. All right, a year ago, they were trading $17.80. They rallied all the way up to about 31, almost $32, right on the cusp of $32. And guess when that happened, listeners? February 19th, so a little bit of an inauspicious date for that, because they sold off pretty hard right after that. They got down from 32 down to about 14.67 in the great nadir of March there, so they got hit pretty hard, pretty much cut in half. And then they started rebounding pretty quickly. Within a week, by March 26th, they were trading in the low 20s again. And by, looks like, April 29th, they got up to 27.5 again. So they had almost regained all of their sell-off by late April. And then they started selling off again. So down to low 20s again. So they kind of had a little bit of weakness there. Then they rallied in their weakness. Now they're on a bit of the rally train again, all the way up to where they are right now, $29.33, up 63 cents, or about 2.2%. So it's been an interesting topsy-turvy couple of months out here for, let's just call them STEM. Let's see what STEM is up to today, what our Eye of Sauron has found for us. It's AUG upside. It's the AUG 35s going up 3,888 times. These are for 35 cents, so pretty much a nickel off the offer over there. They were 25 cents at 40 out there. Worth noting, a lot of calls are trading in STEM today. Also about 7,500 of the July 30 calls as well. So paper just liking themselves some calls out here in STEM. Doesn't seem like it's a roll out here. They went up around similar time. It was just kind of a massive, got to give me all the call paper I can get. So July 30s, which are pretty near term and pretty close to the money. And then we got AUG 35s in our big print today, or at least the one that we found, 4,000 or so. Those are going up for 35 cents as well. Earnings are on the 23rd, so pretty clear we got some earnings swings at the bat here, Mr. Meatball. What's your take here? Kicking us off. Pretty aggressive upside paper here, and everyone's favorite name, ST Microelectronics NV.
Well, I love my Italian logistics companies. So, yeah, I don't know much about this one, but, if you look at how badly trucking and a lot of these different names have been, it might just be an aggressive call buy.
This is the semi one. So not semis in the old semi-tractor trailer sense, but the semiconductor sense. So a little bit different.
I thought you said... All right, well, I misheard. I was thinking of something else. But in semiconductors, if you look at how... then that would totally make sense because semiconductors have just been off to the races. So, yeah, I do think it's just an aggressive call buy. Maybe somebody dumping some long stock and buying calls to protect themselves in case the thing keeps going. I would not be surprised if that was the case, given how strong semiconductors have been.
Well, we're going to watch that one. We're going to come back to it, see how it fares, how the July and also the AUG fares as well. If those calls aren't meaty enough for you listeners, well, then stay tuned. We got you covered next in Mohawk Industries, ticker symbol MHK. This is a flooring manufacturer out of Calhoun, Georgia. They're trading $75.41 here. Up, good day for them. Up nearly $5 or 7% on the day. So I'm going to guess that there's probably call paper on the tape, and that seems to be the case out here. Yeah, it's the... Oh, first, before I get to that... You know what? I just said all of that, listeners, and I was muted the entire time. So you missed out on some pretty fun Mohawk Industries analysis of where their stock has been. In a nutshell, Mohawk's had quite the run all the way from 150 down to 50 and then back up to 75. I pulled the rock lobster. I muted myself. What a strange thing that was. All right, let's keep on rolling here. What our Eye of Sauron found. It's the AUG 75s. Pretty meaty, like I said. 3,675 going up in one block for $7.75. This is through the offer. They were $7.20 at $7.60. Someone went over to the NAM, the NASDAQ options market, said, I need these bad boys. I'll take what you can get. What can you give me? They said, I'll give them to you all at $7.75. So they wanted them. A total of 5,600 have traded on the day. So this is a pretty active strike out here for good old Mohawk. And these are juicy. These are at-the-money calls effectively now, and they're trading for $7.75. There are earnings coming up. Earnings are on the 30th, so this is an earnings play as well. Mr. Meatball, we're kind of 2 for 2 here. This one's a little bit meatier, I think, to use a technical term here, a $7 call as opposed to our 35 cents call. But it seems like a similar play. Someone diving in hot and heavy for some earnings upside call action in Mohawk, sir. What's your take on this one?
I think if you look at what Home Depot's done, what a lot of the different, Lowe's, any of the construction stocks have done, the fact that flooring has been left out and Mohawk makes fine carpeting, according to our friends at Empire Carpet, that you're going to be missing out. So I think this is absolutely a play that they're going to have great earnings.
Seems like it. So we're going to be coming back to this bad boy too here. We're 2 for 2 here, listeners, in the to be watched category. It happens a lot during earnings season of a lot of interesting near-term swing for the fences kind of paper. So if you're saying, we've covered some interesting industries so far, kicked it off in semis, then we got to flooring, let's round it out with another area we don't really talk about a lot, which is the self-storage. Actually, not self-storage, actually data storage here. This is flash storage here, but the company is called Pure Storage. So not that far away from the semis after all. This is PSTG, Pure Storage Inc., trading today $17.45, up about 15 cents, or not quite 1%. A year ago, this thing was trading a little bit south of where it is right now. It was trading $16.11, and then it rallied all the way up to $20.50. That was in November. Then it kind of was still hovering around 19 or so bucks when the big sell-off started in February. And when all the smoke cleared from the wreckage in March, it got down to $7.93. And it has since been on the rebound ever since. Got up to about 17 bucks on June 1st. Kind of been vacillating around here ever since. Seems like it has plateaued around this 17 to 17.5 range. But a nice little mini bump out here today. Let's see if we're 3 for 3 on the call side. No, we are not. Seems like someone maybe a little bit spooked by this recent run wants to lock in what they got, because we're looking at the AUG 17 halves going up pretty meaty, the puts, 2,000 times for $1.25, straight up through the offer there on the Philly. Yeah, there were about 1,964 offered. He took all of them, 2,000 of them, for $1.25. Interestingly enough, this is an AUG, straight up AUG play, and the earnings are on August 27th. So that's not going to do it from an overall AUG expiration, because expiration is the 21st. So, yeah, that's an interesting play. You're going to pay this much money for a very near-term put and not have it cover you through earnings. Kind of interesting. Not exactly perhaps the way I would construct this, but again, I'm not slinging a lot of premium going into an earnings play either. Mr. Meatball, a little bit of flip of the script here. Seems like someone loading up on some downside, but not paying up enough to cover themselves through the earnings cycle. What's your thoughts on this one, sir? And what is this? It's Pure Storage Inc.
Maybe someone's looking for a visit from the pre-announcement fairy, and or some sort of pre-earnings announcement move. Could be something like that that's not completely unexpected. Or that's all I got. Someone's looking to hedge something that isn't earnings. They're looking to hedge ahead of earnings. Or they made a mistake. Totally possible.
The pre-announcement fairy. I do like that. That's a good nuggets. By the way, my keen-eared producer has concocted a list of Burt Reynolds Western movies for me. They include 100 Rifles, Navajo Joe, Sam Whiskey, Iron Cowboy. Who knew he made so many freaking Westerns? The Man Who Loved Cat Dancing, and Hard Ground. Any of those ring a bell, sir?
That is not the one I'm thinking of. It might not have been Burt Reynolds.
Okay. That makes more sense.
Willie Nelson did a song about it, right? It was, who's the girl from The Graduate?
Oh, the actress? I'm blanking on her name. I know who you're talking about. But
not the mom.
Oh, not the mom. Oh, I have no idea what the girl's name is.
Not Catherine Ross. Am I thinking of Anne Bancroft?
He said he's in Gunsmoke's a TV show. That can't be it. So I'm getting all sorts
that's
of
not it.
Getting all sorts of weird stuff. We'll keep mulling it over. You keep mulling it over, Mr. Meatball, as it's Uncle Mike time as we head on into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Welcome to the Strategy Block. It's Monday. It's time for Uncle Mike to hold court. Uncle Mike, maybe you have the answer to this riddle to us as well. Are you aware of some famous Burt Reynolds Western that was not on this list, sir?
I am not, unfortunately, but I do know a lot of the lines from Smokey and the Bandit, though.
That's the one I'm thinking of. Smokey and the
That's not
Bandit.
a Western. That's a car movie.
No, that's not the one I'm thinking of then. But it's got Catherine Ross in it. It's got a, they call him the Bandit. Is that?
It's Smokey and the Bandit.
Smokey and the Bandit. He's the Bandit.
Is that have Catherine Ross in it?
No,
got a
I don't
long
think
way
so.
to go, a short time to get there. We gonna do what they say can't be done.
That's the fine.
That's kind of a Western.
That's the fine genre of the Burt Reynolds, Dom DeLuise oeuvre that everyone
Reynolds
loves.
was in Smokey and the Bandit. That is the movie I was thinking of. But you know what? Catherine Ross is in Butch Cassidy and the Sundance Kid. So I might have been mixing those two together.
I think you're mixing two fine films together, Smokey and the Bandit and the Sundance.
You know what?
That's a heck of a movie.
He does have a cowboy hat.
He does wear a cowboy
Yes,
hat.
he
You're right.
does.
He does.
He does wear a cowboy hat.
All right,
So
that makes a little more sense.
I'm just going to say that's kind of a Western. And he's got a Camaro.
Anything
That's like
with
movie.
Dom DeLuise, can it really be called a Western? I don't know. That's a question.
Smokey and the Bandit 2. And you know what? That was not Catherine Ross. That was, what's her face?
Sally Field.
Sally Field. Catherine Ross was in Butch Cassidy and the Sundance Kid.
You're on a Catherine
Sorry,
Ross kick
folks.
today. Great. This is why
I
we
got
have
it
the
all
meatball
wrong.
in, for his deep Burt Reynolds insight.
I got it all wrong.
I was wondering. I was like, what Burt Reynolds Western did I miss? All right, Mr. Uncle Mike, save us from this madness, sir, while I wipe my image of Burt Reynolds Westerns from my mind here. What's on your radar today, sir?
For all those scumbums out there, there's beer in Atlanta, they're thirsty in Atlanta, and there's beer in Texarkana. But anyway, what I want to talk about today in the strategy block is the importance of being nimble based upon implied volatility. So to give you kind of a macro example, at the beginning of the year, implied volatility, I believe, was in the the VIX was like around 12, 13, somewhere along those lines. And so one of the strategies that I've done for quite a while now was actually kind of hard for me to start doing it, but it was actually became very profitable, was just simply buying out of the money calls. And what I would do is I'd take a small amount of cash, buy an out of the money call, and just sit on it. And then eventually the market would go higher and it would profit very nicely. Now, we're at a point now to where, like I was saying earlier in the show, if markets are positive for the year at the end of the day today, I'll likely be deploying more capital and doing some type of strategy. Now, with that being said, am I going to be buying out of the money calls? No way. There's no way on earth I would do that in this environment. The reason being is that, just to kind of give you an oversimplified example, when implied volatility was in the low teens or 11 or 12, around that area, I felt that implied volatility was at a lower cost to where I could justify buying it, and I felt that the market would move more than what implied volatility was saying it would move. Now, at this stage, I don't feel comfortable doing that at all. We have a VIX of roughly 28 right now, and you could, in theory, be justified in buying out of the money calls, but when doing so, you're going to have to get a lot more movement or shell out a lot more money than what you would have back in January before the world changed. So what I want to emphasize today is just the importance of being nimble with your strategies. Oftentimes people will maybe just constantly be a premium seller. And then when volatility goes to really low levels, because of the fact that they believe premium selling is the only way to go, then it can be kind of tough, meaning that you're going to either have to take in less premium for what you actually sell, or you're going to have to take on greater risk and moving your strike prices a little bit closer to being at the money or whatever you're doing. So what I want to emphasize today is that have your numbers, have your marks to where you want to make either qualifications to what you do. Because let's say that you are of the school of thought that you just can't do it without selling premium. You're just not a premium buyer. You can't do it. Are you afraid that Mark Longo is going to call you a degenerate, so that just the shame of that title just scares you away from such a thing? Well, make sure that you have some type of adjustments in place to where you have for your premium selling. Perhaps maybe do a spread instead of just a straight up short put or short call. Maybe do some type of a ratio, something along those lines. If the volatility isn't exactly what you feel it should be based on what your rules of trading are. Now, if you're a premium buyer and you don't want to be called a degenerate premium seller by Mark Longo, then with that being said, in times of higher volatility, perhaps maybe sell a call or two against what you're doing. It doesn't necessarily have to be a 1-for-1 call spread. Perhaps it could be maybe normally you trade a 10 lot, maybe sell maybe a 3 or 4 lot of calls against it. So that way you're not taking on quite as much monetary risk. Be creative in what you're doing. Perhaps set up a ratio. Perhaps consider learning about butterflies from, Mark, Sebastian, and Andrew. Learn about those things. So what I want to go with on this is that make sure that you have a plan for when volatility changes. If you do feel comfortable with one trade or one style of trading, that's fine. But make sure that you have adjustments for when conditions change, because the only thing that's constant in this market is change. And that is my strategy block for today. We crossed the finish line. Got the beer to Atlanta. Very excited about all that.
All right, and let's keep on rolling. We got some time for you folks on the show, so let's get on into a little Monday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block portion of the show where you guys take the reins. Sometimes we ask you guys questions. Like Mr. Meatball, we asked this very important question a few minutes ago. We decided to say the Meatball is insisting that the iconic Burt Reynolds film Smokey the Bandit is actually a Western. Is he correct, yes or no? You will be disheartened to learn, Mr. Meatball, that so far 100% of the voters have said no.
That's a load of hooey. You know, I Googled, is Smokey the Bandit a Western? And first thing it said is, car movies became the new Westerns of the 1970s, involving outlaws, blah, blah, blah. So it's literally a spaghetti Western in a car is really what Smokey the Bandit is.
The technical definition from IMDb description, it is a road action comedy.
I don't know, man. I think it's, the Trans Am, the cowboy hat, you name it. That's a Western of some type. It takes place in Texas, Atlanta, Georgia, everywhere. And it doesn't, it screams Western.
Well, our audience is screaming no to you, sir, so far. So a very quick flash poll. If you're listening live, you can vote. If you're listening after the fact, listeners, probably too late. This one's a little quick one. But, the Meatball, our audience saying no so far. We'll see. You got a few more minutes left, but we'll see. We also asked you a more important poll, which expired just a couple days ago here. We asked you guys what you thought about these current levels out here, what you were comfortable doing in SPY. We gave you 4 choices, getting bullish with some naked long SPY, like Uncle Mike is getting ready to do right now, just diving right in, buying all those deltas, pure naked long, no hedging whatsoever. Number 2, bull option number 2, I should say, which is get long, a little more limited perspective, getting calls or call spreads. Number 3, you're not comfortable doing anything, you're sitting in cash. And number 4 was getting bearish with long puts or put spreads, and that ended up winning with about almost 35%, 34.7%, so a little over a third of the voters saying they want to get bearish, 25%, so a quarter, saying they want to be in cash. So add those two together, you got a pretty strong majority of our audience wants to get bearish or wants to do nothing. And then the rest of the audience wants to get slightly bullish with calls or call spreads, 22.7%. And then rounding out the top 4 here, we got getting naked long SPY, only 17.3%. All right, let's get to some new questions here. This is an interesting one. This comes from Mattiar Jafari. He wrote in and said, "Hi, big fan of the show. Couldn't find an email, but I had a question." By the way, if you guys have questions, it's pretty simple. If you want to use the old email format, questions@theoptionsinsider.com works. That's how you get us. So questions@theoptionsinsider.com. You can also go to our website. There's a question form right there. Just hit the contact us. It's all there. So there's a lot of ways if you want to go the old school email way to get a hold of us. A lot of you like the social media route, but if you want to go email, there you go. He says, I couldn't find an email, but I had a question. On VolView/option block, you discuss options volumes of different contracts traded. This is something that has always interested me. In some of my own research, I came across the NASDAQ ISE and NASDAQ GEMX open-close profiles. How is the ISE different from the GEMX? Furthermore, how do the numbers from NASDAQ ISE or GEMX report differ from those you report on your show? Thank you again for all us lay people just trying to get a deeper understanding of your profession. It is truly appreciated. From Matt TR. Well, thank you for writing in, listener. Thank you for writing in, Matt TR out there. Great question here. What you're talking about there are what were formerly the exchanges of the old ISE, aka the International Securities Exchange. It was the flagship ISE, which was the first ever electronic options exchange. It was the great boogeyman all of us were watching down on the floor of the SEBO in the late 90s into the early 2000s. It was going to change the game, and it did, quite frankly, for options trading. GEMX is their Gemini exchange. Was a second exchange they spun off. Same matching engine, same type of technology, just a little bit different in terms of how they charge their fees. That's effectively the only difference with exchange now. Is it maker-taker? Is it taker-maker? The fee model is different. That's really the only difference. And so that's why NASDAQ, when they bought ISE, they bought Gemini, they bought the main ISE exchange, and they had that third one under their umbrella that I'm blanking on the name of it right now. So they had a few exchanges that they bought all under that ISE umbrella. So how does the volume differ? Well, one of them is just going to be a little bit more than the other, probably a lot more. Gemini hasn't doing a ton of paper. So ISE is going to be the main flagship exchange for NASDAQ. I kind of lump them all together under NASDAQ now because they all are part of the NASDAQ umbrella. There really isn't a material difference on them other than the different types of fee structures involved, which I think for your purposes isn't really that informative. How does it differ from the numbers we quote? Well, we quote overall numbers. Like today I was quoting overall volume numbers for these names, not something from a particular exchange. What you're getting from NASDAQ is only the volume from their family of exchanges. If you go to SEBO, it's going to be the same thing. If you go to CME, wherever you go, they're only going to report their volume in their own products on their own exchange because they have a vested interest to do just that. We look at the whole. So when I quote you numbers on, let's say, this show from last week from the OCC, that is the Options Clearing Corporation. That is the entire equity options business as a whole, because OCC clears not just NASDAQ and ISE and Gemini and NAM and all that stuff. They also clear SEBO. They clear our friends over there at MIAX. They clear everybody in the entire option spectrum out there. So all those exchanges are all lumped together. That's why we quote OCC. It's all a one-stop shop for all the volume out there. And you can see June was the most active month on record out there. So that's why we like to look at those, Matt TR. We find it more informative for overall industry trends. If you want to look at one individual exchange through a very narrow lens, it's going to give you a narrow slice of a particular window and particular piece of paper. For example, SEBO does a lot of vol paper and SPX, so you're going to get a window into that if you look at the SEBO. NASDAQ doesn't really have a specialty. They kind of just have so many exchanges that it's kind of interesting from that perspective. But yeah, looking at individual exchange, unless you're really interested in some very myopic portion of paper flow that only goes up, or lion's share. Like, for example, Philly still has the lion's share of the dividend trades. Even though most of that trading has gone the way of the dodo, OCC has tried to make some rulings to make that less popular and less profitable. It still goes up, and it goes up on Philly because they refuse to implement their limit. So Philly has a certain weird microcosm of flow there. It doesn't really exist anywhere else. So little exchanges do things like that, but ISE, not really one of them out there. Great question, though, there, Mr. Mathiar. Keep them coming out there. We got to keep on coming into our next segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, Mr. Meatball, you'll be happy here because it seems like a few people have come in. It's now 40% yes, 60% no. So have you discovered this poll? Have you tweeted for yourself, sir? Is that what you're doing?
I maybe voted once, but that doesn't mean that I'm incorrect.
Have your children, have they got Twitter yet? Are they coming here voting on your side, sir?
Right. Yeah, no, they do not.
All right. Aside from all things Burt Reynolds, what else is lighting up your tape for the rest of this week till we gather here together on Thursday, sir?
I really want to see what Apple and Tesla do. I think that's going to be kind of a fascinating thing to watch. I think that's going to really help us manage, how things move over the next few days and weeks. So that's going to be fascinating.
You guys are looking at any interesting volatility-oriented plays in either of those names these days? They're getting kind of rich, but
I'm actually looking at, believe it or not, the other way. And I noticed that, you can go out to some of the Leap stuff, and right now, as we speak, I'm putting on in XLI the 6560 put 1x2 for a pretty nice credit. And unless I mind buying XLI for $53, I'm going to be a pretty happy camper, I think, with that trade.
There you go. The old put 1x2, a popular one this day and age. Mr. Uncle Mike, you're getting ready to do some stuff. So what's on your radar until next time we gather together, sir?
I'm just watching the 3,200 mark in the SPX, 322 mark in SPY. I'm really laser focused on that right now because it's a mark. And have a small position on already. And just going to be curious to see if we can hold that or what we do at the end of the day, because the last thing that I want to do is buy the top.
Yeah, you don't want to be George Soros coming in and loading up in, March of 2000? One of the more infamous tech buys and market buys in history. Didn't really work out too well on that front. Uncle Mike, loading up on the deltas there, listeners. All you guys have been writing in saying, what's Uncle Mike going to do? When's he going to get in? Maybe now is the time. We shall see, Mr. Uncle Mike, sir. But that unfortunate music means we're not going to see any more on this program. If you need some more listeners in your ear hole, stay tuned. We'll be back in about an hour with our old buddy, Mr. Simon Ho of Vol fame. He's got some interesting Vol stuff going on the crypto side. We're going to talk about that and a lot more on the crypto rundown in exactly an hour. So if you like all of his volatility indexes, remember, he did create the spikes after all. Interesting stuff going on there. Stay tuned for the crypto rundown in about an hour. We'll break all that down. In the meantime, we'll have some fun stuff piped into your ear holes, maybe some boot camp advisor's option, all sorts of good stuff in there to keep you entertained. We'll be back in exactly an hour, beaming in our friend from across the pond over there. But before we go, let's go back around the horn. Let's start with the unclest of Mike's while he's getting busy, getting ready to add those deltas. Mr. Uncle Mike, sir, if folks want to call you up, maybe they're interested in adding some deltas of their own. Where should they go? What should they do?
stcharleswealth.com. Find my information. Give me a call. I would love to have a conversation with you because as of now, I might get in, I might not. We're like right on that borderline. So we'll see what the rest of the day brings.
Oh, just dive right in. What's the worst that could happen, sir? Dive right in. Both feet. No hesitation.
You make a valid point, Mark.
Fear is for the weak, right? Just dive in. Hesitation be damned. Deep end of the pool. All the cash, all the deltas, all the liquid capital over there at St. Charles Wealth Management. 100% in deep, meaty SPY calls by the end of the day. You heard it here first. Listeners, find out for yourself what he's up to. stcharleswealth.com. Click on the Fox for fabulous prizes that hopefully will be there someday. And Mr. Meatball, if they come to optionpit.com, there's no Fox to click on, but maybe there's something else fun they could do over there. What can they do over there in Option Pit land?
I put a blog out every day, and put out some really fun things. So if you're not on our email list, go and get on our email list. We're going to be launching our new website in the coming days and weeks. If you want to know about VIX and volatility and trading and self-directed investing, we are the place to come. If you want the best investment advisor that I know, then you come see Mike. And if you don't think I mean what I say, he is managing money for people directly related to me.
There you go. What's with everyone doing a new website these days? I'm feeling left out. I just did mine like a year ago. I feel like I'm already getting outdated all of this. Everyone
you are.
Everyone I'm talking to has got a new website up and coming. So maybe I need to dive back into that fray, even though I don't want to at all. So check out his brand spanking new site sometime soon. Over there, optionpit.com is the place to go. And on behalf of the greasiest of meatballs, a.k.a. the guy who was wrong about Smokey and the Bandit, at least according to your folks, I speak with data, and the unclest of Mike's, and myself. I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions like Matt TR and everybody else for voting in our fun and sometimes silly polls. Keep it coming, and we'll see you back here on Thursday for the option block and throughout the week. A little bit later for crypto, we got, of course, Options Bootcamp, OPR coming your way this week. as well. Lots of fun stuff, so stay tuned. We'll keep you engaged, and we'll be back here on Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.